Are you tired of banks and the finance system as we know it just kind of sucking and we all just living with it? Do you want to grow your finances in a safer way instead of trusting the system we're told to trust that doesn't always seem to work in our favor? Today, I'm joined by Sarry Ibrahim of the Thinking Like a Bank podcast to talk about banking on yourself. My name is Brent, and welcome to the Fallible Man podcast, your home for all things man, husband, and father. We provide content to help men become the men they want to be, and we're going to get right into it today. Be better tomorrow because of what you do today. Sarry, welcome to the show. Thanks for being on the podcast today. It's a pleasure to meet you.
Hi, Brent. Thank you so much for having me on. I appreciate it.
I'm a strong believer in men taking control of their finances. Frankly, everybody taking control of their finances. But I've never seen the approach that you talk about before. It's something just entirely different than what I've experienced. What I really want to know is, tell my listeners today, who is Sarry Ibrahim? Who are you? Why do they need to listen to you? Why are you here today? Tell us what they need to know about you.
Yeah, well, thank you for that, Brent. So, as you already said, my name is Sarry Ibrahim. I'm from Chicago, Illinois, and I'm a financial planner. I help people, businesses, real estate investors protect their wealth, grow over time, guaranteed and predictably. And I think one thing that would resonate with the audience on why this is going to be an impactful conversation is because if we kind of take a step back and look at some of the problems that people have, I think typically finance is on the top of the list for people's problems or their opportunities. So it's kind of up there as far as what people think about, what people concentrate on is definitely their finances. And over the years, after doing my master's degree in business and working for different insurance companies and financial services firms, I've learned that a lot of people do certain things financially because of the way they're taught, not necessarily because of the things they've studied. And with this, there's some that could be problematic in some situations. Like, for example, when people think of growing wealth, they might think of instantly as a stock market. So you're at your local bank or, you have your insurance agent, you paid all your bills, and then whatever's left over, typically for a lot of people goes in the stock market. And of course, the stock market over the last 10 years has been doing really well, but who knows how long that's going to be? Nobody knows what's going to happen in the stock market moving forward. And that's obviously opened up a lot of doors to a lot of problems for people by relying on the stock market, relying on financial advisors, Wall Street, banks, the media kind of guiding us on what we're doing with our money. So I kind of saw these problems and I was like, I want to go out there and talk about this new strategy for people, a strategy that I learned that I'm implementing. My wife and I are both implementing the strategy. And I want to tell as many people as possible about this and how it can help them grow wealth, avoid the stock market, the twists and the turns of the stock market, and not have to rely on banks moving forward. So that's kind of, why I wanted to be on your show, why I wanted to talk about, not just general financial planning, but a specific type of financial planning that helps people grow wealth outside the stock market, not having to worry about what's going to happen.
That's a mouthful. I saw you are a podcaster as well. Thinking Like a Bank podcast, right? That's you. Are you only on YouTube? Are you on just audio podcasts as well, or both?
Yeah, on all the podcasts. So my website is a new website. It's lagging a little bit of lacking a few of the podcasts. I think right here is only about 3 or 4 episodes up. We actually have 12 episodes up on all the other podcast platforms. We have on Apple, Spotify, Stitcher, all YouTube. We have a YouTube channel with all the podcasts. I've also been a guest on over 100 shows. So we have some of them on here, guest appearances. And then it's been nice. It's been really cool because I started it in March of this year, and for the last year, people have been telling me, other hosts and stuff, to get my own show, just because it kind of helps. As a fellow podcaster, you could probably relate. It helps when you could control the content you want on there. For example, sometimes on my show, I want somebody who's an accountant, somebody who's a CPA on, just talking about taxes, and we could do that. And then I'm working on right now with a lawyer to come on and talk about the legal sides of the strategies we use. And real estate investors. I brought a bunch of real estate investors on talking about real estate investing, what to look out for in investing in real estate, things like that. So that's why I kind of started the show, was so that I could cherry pick certain content subjects and then bring on experts in those spaces. I still haven't done one solo episode yet. It's all just guest appearances only.
Solo episodes are a little rough, man. I filmed a lot of solo episodes before I got to guests while we were talking about your business. Hey, let's pull it up. So you can go to finassetprotection.com to dig into this further with Sarry, or to get, didn't I see you have consultations? Is that correct? All right.
Yeah, definitely. I recommend that all, like, just kind of a general financial advice for people listening is that when you work with other financial advisors and financial planners, you want to make sure that before they give you any recommendations, they do a full, like, thorough analysis on you and your financial situation before they come up with a financial product or a recommendation. It's like, imagine going to the doctor and then you walk in, the doctor's like, hey, check out this prescription. I think it'll help you out. And you're like, I didn't even tell you what was wrong. You didn't diagnose me, you didn't ask me any questions. That's how it is with a lot of financial strategies, is that people already, like the advisors will already have the prescription already written out before they even meet with people. And obviously that's problematic and, leads to financial malpractice. It's just as problematic, as anything else. A lot of people have lost a lot of money. They've lost their savings. They've done crazy stuff like taking out loans against their homes, all because of malpractice, just following bad advice. And obviously, we need to be smarter than that. We need to be more wise. Another problem I've seen is that people don't even know their specific financial situation themselves. Like, so in other words, I'll talk to a client and they'll say, I have a bunch of debt. That's all they'll say. And then when we start getting deeper into it, like, well, how much? And, they'll say, well, I have 3 credit cards. And then as we're going through the analysis, they're like, oh, I never actually thought of all these things. So what I started to do was I made a financial tracker that I track every single day. It sounds redundant, but I do this every day. So every day, Monday through Sunday, I log in the morning around like 7 o'clock, 8 o'clock in the morning. I log into all my accounts. And then I have an Excel sheet that I made for myself and I made for my clients. And actually I give this away for free. So it's like a tracker that has a day and a date. It's like, so for example, today is Monday, June 7th. And then it will say like how much I have in my checking, how much I have in checking account, how much I have in my savings account, how much cash I have on hand, how much cash I have in my cash value, whole life insurance policy. Like, I don't have a 401k, but if I did have a 401k, how much cash would be in there? And then there'd be a sum of assets. And then next to it would be how much I earn for that day in income, either through, so I'm self-employed. So that would be like income that I earn from the vendors that I work with. And then on the right side of that, the far right side, it's all my debt. So it's like, for example, credit card number 1, credit card number 2, and I even named them. So if it's like Bank of America, Chase Bank, MasterCard, whatever it is, I named them and then I put that debt in red for that day. So if one of them is, $4,000 account balance, the other one's $2,000, I'll write that in there. And then when you do this every single day, it takes about 15 minutes to do this every day. When you do this every single day, you know your numbers inside and out. You know exactly where you're at. And then the next question is, where you want to go. So if your goal is to reduce your debt down to 0 debt, then you can see in red what you have to do. So as you're earning more on the left side, then you can start pushing those dollars to the right side and seeing the numbers go down, the debt go down. If your goal is to increase income, you can increase that column. If your goal is to increase your net worth or the sum of assets, you can work on that. And then now your brain starts to think of different ways to help achieve your objective because you're seeing it every day. You're able to measure it precisely. And then therefore you're able to control. You're able to what you can measure, you can control. So that's something that's helped a lot of people. And I gave away this template for free for people who reach out to us. It's like an Excel template that has all the days and everything plugged in. And all you do is just plug in all the numbers. And I've seen significant impact results from the positive results from that, both on myself and for my clients.
Sounds slightly like a cash flow statement, only more advanced, or
more
you're right, broken down. Let's just say
more exactly, more decomposed, broken down, and on a daily basis.
Okay, so I've seen cash flow statements, but it's a daily version of that with a more detailed breakdown. Sarry, tell us. Okay, I read a little bit about it, and like I said, I listened to a couple of your shows. tell us about the infinite banking concept or banking on yourself, because it sounds so foreign to, I'm watching the stock market every day and watching my investments and stuff like that. It sounds so not only foreign, but almost radically contrary to traditional ideas of saving and investing your money.
You're right. It is. It's very different. It's very kind of outside of the box, radical, and it takes a different mindset to really not only understand infinite banking, but to also implement it too. So I guess before explaining like what it is, I think it'd be really important to understand like why it was even invented, why it was even created, and the reason why it was is because if we look at everything especially in the United States, everything we own or use is pretty much financed by a bank. If we think about, for example, student loans, a lot of people have student loans. A lot of homes have mortgages, car payments for cars, and credit card bills. So we're constantly going to banks for financing. And although that could be convenient, the problem is when we do that on a long-term like horizon, a long-term spread, it's very common to look back and say like, wow, like about 1/3 of all our money, that's actually the average, about 1/3 of all the money we make goes to service debt. So that means that we're almost like working for banks. Even people who are self-employed and people who are real estate investors who are completely self-employed, it's almost like every time they want to buy properties or businesses, they're getting lines of credit extended from banks, and they're almost like sales reps for banks. They're just going out, doing all the work, everything, and the banks are sitting back collecting passive income via interest. So the infinite banking concept was designed to address that specific reason, that specific problem of repositioning dollars that you're spending to financial institutions, but to reposition them and spend those dollars back into your life, where you're becoming your own banker. You're able to move in your business and your real estate journey, your real estate empire, and then keep that interest back into your life. That's the reason why it was invented. And again, I think it's really important to understand the why before we understand what it is. Now, to move into what it is, like you said, it's very different from other financial strategies. It's kind of slightly even counterintuitive, because what infinite banking is that it was invented by somebody named Nelson Nash. And Nelson Nash, he was in a lot of debt, the guy who invented it, and he was thinking about all the interest he was spending. So he came across whole life insurance, and he noticed with whole life insurance, if you design it a specific way, a special way, and structure it properly from the right company, that you can earn compound interest in the policy while still being able to invest in your business or on your real estate journey, whatever it is that you're doing. You would be able to recoup that interest back into your life. So it's the use of dividend-paying whole life insurance. Now, before I go too far into it, I kind of want to tell the audience is, there's 3 different types of life insurance. There's term life, whole life, and universal. So term is just like the term. It's just like the saying of it. It's for a set period of time, usually 10 years, 20 years, or 30 years. There's a start date and there's an end date. And then there's no equity or cash value. So it's just, for example, somebody's 40 years old, they do a 20-year term life policy. They pay for it for 20 years. That's it. Let's just say it covers them for $1 million life insurance. Mm-hmm. If something happens to them within that 20-year period, their family gets $1 million, for example, their beneficiary.
Right.
If they survive that 20-year period, then the insurance company keeps the premiums and then they get nothing back. Nothing wrong with it. That's just how it is. A whole life is the opposite. There's a start date, but not necessarily an end date. Mm-hmm. And there's 2 things that are happening. One is that you have life insurance, and the second thing is you have cash value that's building up. Now, infinite banking involves building up all the cash value in the policy to be able to use that for anything that you want to use. So that's kind of what whole life insurance is. And it's not every whole life insurance company. It's a specific type of company and way of designing it. That's kind of the whole life. And then universal is pretty much a combination of term and whole life. There's some different similarities and differences. It's considered cash value life insurance. It's just there's a little bit more fluctuations to it. But to not confuse anybody, we're talking about whole life insurance and using the cash value in that to pretty much become your own source of financing and growing it over time and addressing the problem we initially started with, and that is reducing the amount of interest we pay to other lenders and then recouping the interest back into our pocket. So I'll kind of just pull over now. I know that was a mouthful.
That was just so many layers right there. we're going to roll to our sponsor for a minute. Guys, if you're getting something out of this, please give us a thumbs up. Check out Sarry. I'll share his YouTube channel with you a little bit later in the show, guys. Let us know you like it. Comment below and stick around for the second half of the show.
Today's episode brought to you by thefallibleman.com. That's right, it's us. Head over to www.thefallibleman.com and check out our blog, updated twice a week with new content and links to all of our social media offerings. Tag or search us at The Fallible Man or at Fallible Man on Facebook, Instagram, Twitter, and other social medias for daily content. While you're there, check out our attitude swag, shirts, cups, stickers, and more. Again, that's www.thefallibleman.com.
All right, guys, we're back with Sarry Ibrahim, the owner and founder of Financial Asset Protection and the host and founder of the Thinking Like a Bank podcast, talking about the idea of infinite banking. And if you've been following along on the show, he just gave us I want to call it even a high-level overview of what that even actually means. I'm pretty sure it could take 4 or 5 hours to unpack every single line of that. What do you want our listeners to focus most on in that?
So this is what I want the listeners to focus on. So there's on average, about 450 different financial products one could use. And then so the consumer mindset is, you're in a grocery store or on a retail aisle, and then there's 450 products, and then you're going to pick the best one out of that, based on the way it looks, based on the way it sounds, based on its reputation, based on the ingredients, and based on other things like that. That's the consumer mindset. That's what most people fall into. Most people fall into the consumer mindset. They're buying things off of a shelf that appear to be the best in their minds, based off of what they've been taught and trained on. It's the best for them. Now, with this concept, it doesn't work like that. It's not like, out of 450 products, you're going to pick the best one, which is going to be infinite banking. Rather, I want you to, before you start looking, identify where you're at financially right now, where you want to go. So you're here, point A. Where you want to go is point B, and then you need a bridge to take you from point A to point B. And then ask yourself, what is the most efficient bridge for taking you from point A to point B? And that bridge is infinite banking. So that's kind of how I would like the audience to look at this, is that, not necessarily what it is, not the title or the label of what you're getting yourself into, but rather, how can it bridge you from where you're at right now to where you want to go? We talked about how much interest we pay to third-party lenders. We didn't even get into taxes. I could talk about taxes too. We're about to see a spike in taxes in the future, starting like now. They're already increasing the highest tax bracket from 37% to 39.6%. So that's going to impact a lot of people, because a lot of that it's just impacted the highest tax bracket now. It's going to get to the others soon. So we want to kind of figure out a way to not only reduce the amount of interest we pay to other lenders, but also how do we reduce our tax in the future? And then, a third problem is market volatility. So, obviously nobody knows what's going to happen in the stock market. It's doing well now, but who knows what's going to happen next? We typically see a crash every, 10 or 15 years. So, it's just a matter of time of seeing what's going to happen and then not being able to time the market. Mm-hmm. And we also have liquidity issues too, where we need cash at certain times. We need to be able to leverage our retirement accounts or whatever assets that we're investing in for short-term needs and wants. And so we're taking those 4 things and we're figuring out what is a way to bridge these 4 things from point A to point B. And in infinite banking, if you learn more about infinite banking, it could definitely do that. It can bridge you from point A to point B. Like, for example, my wife is a nurse. She has something called a 403B at work. Okay. It's like a 401k, but for a not-for-profit organization.
Right.
So it's called a 403B. And the one problem that we see with that, and that I've helped her identify, is that there could be volatility in that account because a lot of it is invested in mutual funds, which are invested in the stock market. There's some bonds in there, some considered investments, but for the most part, it's invested in the stock market. If there's another market crash, the 403 value will be impacted for a lot of people. Mm-hmm. So one way that we've created a hedge against that is by helping her with the infinite banking policy. She puts in about $300 per month for the next 40 years. And I forgot what the numbers are, but by the time she retires, we'll have about like $1.5 million in guaranteed cash value. So that means that we don't have to worry. So even if there is a market crash, we have the $1.5 million just from one source of one policy and one source, excluding everything else. And if there's a rise in taxes, we'll be covered because it's a post-tax option or a post-tax vehicle.
Mm-hmm.
At any point, we could borrow against the funds and be able to use for anything we want. We're going to use it for a down payment on a house that we're going to buy. So there's no liquidity hold up with it.
Okay. Good.
And we're going to be able to recoup the interest back into our policy. That's kind of just one example out of many different ways to use infinite banking.
Can I pause you right there and ask about that? So I was listening to your interview on another podcast, trying to understand a little more about this before I talked to you. So I wasn't entirely speaking a totally different language when you started talking. And it sounded like kind of like borrowing from your 401k.
Mm-hmm.
It's kind of like that, but it's different. How is it different than borrowing from like a traditional 401k?
Yeah, so it's the same. Like, I mean, it's similar. You have a retirement account, some sort of pot of money that you're growing, and then you borrow against it because you need the money and you don't want to withdraw, because with the 401k, when you withdraw, there's usually a tax penalty. So the way to get around that is by borrowing against the funds. Now, that's how it's similar. You're borrowing against it. Where it's different, there's a lot of differences. So number one is that a 401k is an investment vehicle. It's typically a mutual fund through work. That's typically what it is. So when you're borrowing against it, you're borrowing against from the fund, from the pool of cash that you're invested in. Like a lot of other employees are there. When you borrow against it, you're borrowing from those funds. In a whole life policy, in the infinite banking policy, when you have your pot of cash, let's just say it's $100,000 and you want to borrow against it, you're borrowing from the insurance company's general funds. So I guess that's one difference.
Okay.
The second difference is with the 401k, you have to pay back that loan. And if let's say you lose your job, then the mutual fund will count it as a withdrawal. Let's say you borrowed $20,000, you lost your job or you quit. Now you just get, it appears to be now a $20,000 withdrawal, and then you get a 10% tax penalty, and you pay ordinary tax on that $20,000. So that could impact you tax wise. On infinite banking, that won't happen because number one, it's on your own terms, and number two, it's a post-tax vehicle. So when you take the money out, you're taking out tax-free money, especially when you borrow it. It's tax-free money, loans, tax-free withdrawals, tax-free loans. That's kind of how it works in that sense. And let's see what else. There's a lot of differences. I think it's too many to kind of name out quickly. Another difference too was with whole life insurance. It's with a mutual insurance company that's invested in conservative investments. So there is no volatility with whole life insurance, cash value whole life insurance, whereas with a 401k, there is. Now, as far as a loan, that won't really impact the loan, but it will impact the entire 401k. So I guess overall, one thing to kind of resonate, the differences between a 401k loan and an infinite banking loan is that with the infinite banking loan, it is way more liquid and on your own terms. You're in control of the loan. And then it keeps growing, obviously, even when you have an outstanding loan. Whereas with a 401k loan, it kind of pauses it. And the way it grows when you pay back interest into the 401k, that's how it grows again.
Right. So I got to ask you, just because you're talking about secure investments, right? And that's one of the big things that your company talks about is this is a much more financially stable and secure way to invest your money. What do you think about the AMC GameStop stocks stuff?
Yeah, that's a good question. I think it's definitely an example of being unpredictable. Like nobody saw that coming, right? Nobody saw that coming with GameStop and what was going to happen, and how a whole bunch of people on Reddit were just going to take over and just and the hedge funds didn't see that happening. But I guess the point is that for people, for the investors, is that you never know what's going to happen in the stock market.
Right. Now,
here's a twist to it, though. I'm not completely opposed to the stock market. I like hearing these stories, and I like hearing about exponential growth in the stock market. But there's a way where you could do it with your whole life policy. You could do it with infinite banking, because one of the principles of infinite banking, and something we talk about on our show, Thinking Like a Bank, we never talk about either or. Like either we do stocks or infinite banking.
Mm-hmm.
And again, that goes back to the consumer mindset. The consumer mindset is which one of these vehicles is going to be the best one for me.
I've got to pick one, right?
Yeah, exactly. You have to pick. Well, whereas with infinite banking, it's an abundance mindset. It's both and. You know, how many am I going to put on top of each other and pile up in a creative way, and thinking like a bank, and think of using multiple dollars for multiple functions. So absolutely, you could do infinite banking, and then when you come across this opportunity like GameStop or AMC or whatever happens in the future, you could borrow from the policy, use that to buy stocks, or any other stocks for that matter.
Mm-hmm.
And then now you do both. Now you're investing in these exponential rises, and you are also using infinite banking. And it's also a hedge against that law, because if something happens with those stocks, you still have the policy, and it does not decrease in value when you borrow. So that's also something to consider when you are. It's an abundance mindset. It's both, and you can do multiple things, especially with the stock market and infinite banking at the same time.
Well, and I like the idea of, hedging and having it as a backup. But I like the idea of, if you see an opportunity like AMC or GameStop, right? Because GameStop's kind of leveled out some. AMC is playing the yo-yo right now pretty good. But I like the idea of, it's like, okay, so I have this. And you know what? I've been good with this. I can make an estimated. So I'll pull some out of here to try this, but I don't have, I like the idea of, it's like I like multiple income streams, right? I like the idea of multiple revenue streams. Just having your earned income from your 9-to-5 job is a horrible concept, and I wish they taught that better in school. So that entirely makes sense. We're going to stop for 1 second and go, hey guys, it's time for the question of the show. Do you have some kind of saving system set up, and what is it? Do you invest in the stock market, bonds, traditional 401ks, IRAs, or stick it in your mattress or in your bank?
Yeah.
How do you guys do it? Share with us if you're comfortable in the comments below. Please don't leave any details, just a general, what is your way of saving for a rainy day and investing your money? So this is a two-part question for you, okay? Is there a financial bar to get started with your company and investing the way you guys do and the way you guys teach people to do it? Or can anyone do it? And B, your company, Financial Asset Protection, helps people do this. So how will one of my listeners go about getting started with your company if they're interested in trying this out with you?
Yeah, so I'll answer the second part first. So they can go to our website, like you said already, you already showed it, finassetprotection.com, F-I-N, assetprotection.com. You can go there, you can schedule a free appointment, a free consultation. You can also email me from there. I can send you a free copy of the book, Becoming Your Own Banker by Nelson Nash. Nelson Nash, as mentioned already, is the one who invented the infinite banking concept. So I can send you a free copy of his book that he wrote. I'll send it to you via email for free. You just reach out. I already mentioned you can schedule an appointment. You can check out our podcast. There's a bunch of other free content too on there that you can check out. So that's kind of the one part. And then now the first part of the question, I didn't understand. It's the financial bar. What does that mean exactly?
Well, sorry. So I was watching one of the other podcasts you were on, and the podcaster said that you primarily help large scale investors, people with a lot more money, what we consider not necessarily everyday blue collar people like myself who are just trying to get started because we figured out our companies are going to screw us in the long run. Yeah.
So that's a question. Most of our specialty is for real estate investors, people who typically make more than $500,000 a year or $500,000 in assets. However, that's not who we're exclusive to.
Grant Cardone's,
even my
Robert
first policy. When I started my first policy, $300 per month. Mm-hmm. My wife's first policy, $300 a month. Our goal is to do a new policy every year, just like that. So that way we can have it like snowballing and compounding. Mm-hmm. So to answer specifically, that's our specialty. That's not who we're exclusive to only. We talk to clients of all different backgrounds. I've talked to clients who are 19 years old, still in college, and we haven't even done a financial solution yet. We're just kind of planting the seeds for the future. I talk to people who are 70 years old. So we're kind of agile in the financial approaches we have. We also have a referral partner, so we can do that analysis, kind of get an idea of what's good for you, and then help connect you with, like, for example, if you're looking for a mortgage, or you're looking for help for buying a house, we could connect you to the right person. If you're looking for business loan or try to raise capital for your business, we can help you with that. So we built a network of different advisors around us, so that way we don't churn down anybody, that we can help as many people as possible. And that's kind of the goal. We want to be able to be like a free financial library for people, where people can come to us for free financial advice and free financial help, Oh, and then another thing too is, before I forget, like these policies my wife and I are doing, putting $300 a month, and a lot of our clients do this too. It's like buying real estate. So like, for those of you who don't know, when you buy one real estate property, you could leverage that property to buy a second property. And then you leverage those two properties to buy the third. And then you leverage those three to buy the fourth. This is how people end up buying like 100 single family homes. It's not necessarily because they have so much capital.
Right.
They just had so much leverage and understanding of how loans work and how real estate works. That's how they were able to do those over and over. And the same is true with life insurance and infinite banking, is that we're going to try to do it where it's like, we buy one policy, use that to buy a second, third, fourth, and all of a sudden now you have, $20 million in retirement tax-free money because of all these policies you use to leverage each other.
Okay. So I understand the realty analysis or analogy a little better, because I've read quite a bit in that, right? Researching my own financial journey. It's like everybody starts reading about real estate investing because those are the big names, Sarry does have a YouTube channel, guys, and I will have links down in the description for you guys to go over and check that out. That way you can hit his podcast on YouTube and see what he's got going on there as well. What is next for you, sir?
For me, so one project I'm working on is this is probably maybe in the next 5 years, I want to start a national not-for-profit organization that helps give out free content or free advice, free content, free recommendations for people around the whole country in any way, any angle of financial planning. So for people who are going through bankruptcy or got out of bankruptcy, for people who are saving up for their first home, for people who are in credit card debt, people who want to invest in certain things, mostly on the helping people with financial problems, all for free, done in all 50 states, and no fees, nothing for sale, all done for free. And the only way we would make money is through donations, through a not-for-profit organization. That's probably going to take me about 5 years to build out, understand. I know nothing about not-for-profit organizations, but that'll probably take about 5 years to do. And that's something I really want to do. I'm very passionate about helping people financially and getting them out of and spreading more financial literacy. So that's why I want to do the not-for-profit organization.
Wow, that's an incredible goal. That's a beautiful dream, man. That's awesome.
Thank you.
I love that you want to reach out and help people get it under control, because our financial education system is just lacking, would be a kind word, I think. Where can people find you? You've got the website, right?
Yeah.
Got the
LinkedIn,
YouTube channel.
You can find me on LinkedIn. I think there's a link from the website to LinkedIn, so you can go. So everything is jointed or connected with finassetprotection.com, and then from there you can connect me on LinkedIn, email. I'm working on the other socials still, but yeah, LinkedIn is also another way you could find me too. Sarry Ibrahim at LinkedIn.
Sarry, thank you for taking the time to join us on the Fallible Man podcast today. I really appreciate you being here and spending time with us and helping my audience. You never stop learning about your financial future. This is something I've never heard of. I'm definitely going to have to check it out. It could help you incredibly. This may be a better answer than half the other answers out there. Please go check out what he is offering. Thank you for staying with the show today, and be better tomorrow because of what you do today. And we'll see you next time.
This has been the Fallible Man Podcast, your home for everything man, husband, and father. Be sure to subscribe so you don't miss a show. Head over to www.thefallibleman.com for more content and get your own Fallible Man gear.